I mean, the silver market is in absolute turmoil right now. It's sort of breaking before our very eyes. And so I want to cover some of the developments here. The first thing we have is a tweet from Zero Hedge. Dear silver shorts, are you panicking yet? And look at this. You can see that the silver lease rates have exploded to 33%. This is absolutely insane. When we covered this a week ago, it was about 9% or 12%. 33% now. This is unbelievable.
Yeah, one of the things that I want to point out is that this is a long-term chart. I've shown charts recently in a few of the videos that I've done, but they didn't go back 7 years like this. This one shows that normal is somewhere right around zero. I mean, nothing. Varying between maybe minus 0.5% or even 1% and plus 1%, right? That's the normal thing. Yep. Less than plus minus 1%, but there's sometimes where you're getting paid to take it, right? And then suddenly we're up at what's it peaking at there?
33%, 33.5%.
Wow, amazing. I mean, imagine your home mortgage suddenly jumping to 33%.
Can't do it. Yeah, this is the sign of a market breaking before our very eyes.
Right. So you add this, all the shorts are having these huge losses in the first place. And then you add this to those losses. And it's a compounding effect that really puts them, they're painted into a corner. And the only way out is to cover their positions, which means buying silver on the open market and returning the ounces that they borrowed and sold, that they are now paying 30% premium on. Jesus. Okay.
Yeah,
let's move on.
Yeah, exactly. But there is no physical, and that's kind of the main problem behind all of this. So across India, not even a sliver of silver available. And, the prices are growing rapidly, and buyers are even offering a premium, but the metal remains out of stock. So there just simply isn't enough physical. That's the problem here.
This is what I talked about when I talked about the metals becoming unaffordium and unobtainium. It's actually stages, and we're going through that right now. They can't obtain it, and so they're offering more than what the official exchanges are saying that the real price is. Well, that price that they're quoting isn't the real price if everybody is willing to pay more.
Yeah, exactly. And this is causing a problem where India funds halt silver ETF investment amid unprecedented global shortage. So unprecedented shortage in the physical silver market, and a number of Indian asset managers have halted all new investments into silver ETFs because they just simply can't get the physical. This is a huge problem.
Yeah, well, two things. This is manipulation, but they've got an agency just like our CFTC or the SEC, and so those authorities can manipulate the price by not allowing you to buy. If you've got one of their ETF accounts, suddenly you can't add to your position. No matter what happens, you're just frozen out of being able to buy in that method. And the other thing is, do you really want to be involved in any of these funds? SLV, GLD, if they can do things like this to you. I wouldn't touch them with a 10-foot pole.
Yep, me either. And isn't this what happened in 1980, right? That's how they capped the price of silver. They said sell orders only, liquidation. Yeah. Yeah,
that's how they broke the Hunt brothers, right?
Yeah. So it's like, to me, the solution is obvious. Get physical as quickly as possible, get it in your possession, and just wait. Yeah, so simple. So anyways, it's not just India, it's also China. So China's raw silver is at $59 per ounce. The physical market takes control. China's raw silver is at $59 per ounce. The physical market takes control. So Shanghai just flashed a huge signal. Raw physical silver trades above $59 an ounce, while COMEX sits around $51. That's an $8 premium, a gap you can't ignore. So yeah, $8, that's pretty significant from east to west.
Yeah, that causes an arbitrage opportunity, and you'll be seeing a lot of silver flowing from the west to the east, which is very sad that, in the west here, a whole lot of people, just normal people, are selling because they go, oh, well, silver's at an all-time high. Well, it's not. Inflation adjusted, silver is way. I mean, we just did an exercise recently where if you were using $1980 to purchase silver today, the price is $12. That's the 1980 price of today's silver is $12 an ounce. It has so far to run. It is insane. And people think that it's at this high that they're going to capture this, and they have no idea where it's going. So, okay.
Yeah, exactly. So right now, like, yes, silver's at a nominal high, but it would have to go up by a factor of 4 to reach a new inflation adjusted high. So silver is still very, very cheap. Like, yeah, absolutely.
Yes.
Never seen anything like it. Amid historic squeeze, silver traders rush bars to London. Goldman still favors gold. So we have a quote here from a commodities hedge fund manager. I've never seen anything like it ever. What we are seeing in silver is entirely unprecedented. There is no liquidity available currently. So yeah, this is a part of that arbitrage that you were talking about, Mike. Bloomberg is reporting that the silver squeeze has become so dramatic that some traders have rushed to book slots in the cargo holds of transatlantic flights for bulky silver bars. And they're basically trying to take advantage of premiums over in London and China, like you mentioned. So yeah, the silver is flowing from west to east.
Yeah, I read this article. Somewhere down in it, it says that the spread is only like 20 cents or something like. Yeah, there it is, right at the top, 20 cents an ounce. Well, before that banner came in, so they're gonna. If you were an investor, and you could either take advantage of a 20-cent spread or is it $8 in China?
Yeah.
$8 spread. Which one would you, I mean,
I like $8.
They're going to try to do this to repair London because London is in trouble. And if London freezes up, the global silver market freezes up. And then suddenly we've got triple digit silver. I mean, this could gap up like overnight, potentially. If you had a choice between making 20 cents and making $8, let me see, I got to do a lot of thinking on that one. Yeah. So while they're trying to slap a Band-Aid on the cracks that have developed in London, the bleeding that's going on there, all of the silver, a lot of these private investors, they're going to be sending it over and selling it in China at 59 instead of this 20-cent arbitrage.
We have a silver refiner update. American silver refiners are now recommending dealers pay 50% back of spot for constitutional 90% junk silver, sterling, and scrap silver. The message below is from a large reputable bullion dealer. So, yeah, so obviously you're a dealer, Mike. Give us some insight into what this means.
Well, this is the reason to buy top quality products that are 999%, they're 99.999% fine silver. And when you do that, it doesn't have to be re-refined before it goes to market again. It can be assayed, but it doesn't need to go to a refiner and sit in line. What's happening now is all the refineries are clogged up. I put this in a video recently, and I talked about mine supply. And people in the comments were trying to correct me, saying, no, it's not mine supply. It's all the people in the West, in the United States, selling their silver because it's at an all-time high, so they might be selling silverware and trophies and jewelry and such that has to go to refiners, but it doesn't matter. What matters is that the refineries are the choke point, and old silver coming to market can't meet that supply. It has to sit in, and this happened, it was called the Big Melt in 1980. It happened, and the whole supply chain got all clogged up, and it was like, I don't know, I think you had to wait more than 6 months for your silver, and they were offering, I think, 30 or 40% of spot for stuff that had to be re-refined. So I don't make recommendations, but everything that I own is stuff that doesn't have to go back through a refinery, and it's because of this. And so, what this says is be careful of what you buy, select the correct products, but then be confident that a whole bunch of silver isn't just going to flood onto the market suddenly and cause the price to fall. The price is going to go up because the refineries this is just one of the many, many reasons that silver has to explode. The refineries are a major choke point.
Yeah, makes sense. Well, thank you for that commentary. James Henry Anderson reminds us that silver is reasserting its value-storing role worldwide. And he's got here the price of silver in, I think, 55 different currencies. And you can see that in every single one, silver is taking off like a rocket ship.
Yes. And so what you have to do is basically in your mind flip all of these upside down. And you have the value of each one of these fiat currencies plummeting as measured by silver.
Yeah, that's not good. Get out of fiat currencies.
Exactly. Right.
Lobo Tigre, he says, so he's got an article here. Bank of America now sees $65 silver.
Go ahead. I'm sorry. I'm laughing already.
Me too. I can't say it without laughing.
These bungling idiots. This could happen before the end of the month.
Okay. Bank of America now sees $65 silver. Very serious. As price spike reduces London market to a, quote, state of seizure. This is a forecast for next year, 2026. They think that's going to happen. So,
right.
Okay.
Yeah, and gold might hit 4,200 by the year 5,000, right? This is just, these people are so far behind the curve. They are going off of the way things were, and they do not seem to understand or take into account human psychology.
Yeah, or math.
Or math.